What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. We do put out videos every night throughout the week and once on the weekend, but we do release bonus content from time to time, so make sure you have that notification button hit. What else? Make sure you follow us on X at Bullish Chips. We provide live or real-time updates for our entries and exits on scalps and day trades, as well as mid and long-term trades as well. Just a reminder, we're not financial advisors. We don't offer financial advice. What we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we think price action is going to take us in the future based off of our trading method and charting strategy. So let's go ahead and get into the agenda today. The videos, getting to the video kind of late today, so don't want to take up too much of your time. We'll kind of get through here as quick as we can without leaving out any important information. So we'll go through the agenda today. We'll do a quick recap of the intraday price action for today. Then we'll look at the wide view, the week, month, quarter, and year. And then we'll get into our triggers and targets at the end for tomorrow. And then we'll review the ones for the week, the month, the quarter, and the year. So just looking at the charts and the intraday price action, excuse me, we had the opening print here up at the 25.41, slight gap up from the previous high day, and that it did trigger the 4-hour and the day trigger to the upside. With the opening print itself, but we did push it down immediately. So we didn't, see any test of the overnight high or anything like that up in the gap, possibly breaking through and closing the gap. We got the immediate push down. And then just looking at the 5-minute, we did get a lower high. We did grab a couple of puts with this lower high. If you remember, if you follow us on X, you would know about our entry there. We did get stopped out for a small loss once we did make the higher high here, which it wasn't a big deal. Again, it was a very small loss, but by then, we were an hour and 45 minutes into the market being open, so we keep our eyes on the higher time frames as well. So looking at the 15-minute. When we got stopped out with the higher high on the 5-minute on the 15, it was just establishing a lower high. So once we broke below the low of this 2-up candle, we did enter the puts, because again, we're looking for puts with lower highs underneath opening print. We're looking for calls with higher lows above opening print. So since price action was not above opening print, we weren't looking for any higher lows. We were just looking for lower highs underneath opening print, and that's what we got on the 15-minute. We were able to write it on down. Thought we would get more support than we did at the 4-hour trigger to the downside, so we were able to go 3 on the 4-hour or bearish engulfing candle. If you're not familiar with the numbering I'm using for these candles, this refers to the strat, which is part of the charting and trading strategy that we use. It was established by Rob Smith. He's no longer with us, but his YouTube page is up. So after you watch this video, you can check out his videos. Link to his YouTube page is in our description, and a link to this free PDF is in the description to this video as well. It's basically very simple, and if you stay with us through the video, you'll have a pretty good understanding of how it goes, and you can just do your own research on it further if you want to dive into it. But there's basically 3 things a candle can do: be a 1, a 2, or a 3. And there are 6 major reversals that can be created from those different patterns of candles. So we like to trade the reversals because they provide a very clear entry and exit, entry, exit, entry, exit. And again, there's only 6 major ones, so you'd be surprised how often that they appear. And you just look for ones that have entries and then targets with a big enough magnitude on them that it's worth your while. You're going to make a good amount of profit. So the reason why we use reversals is because we have a very clear entry and exit. We have a good idea, if not an exact idea, of how much money we stand to make in that equation. So it's very easy for us to establish a stop loss, or how much we want to risk for that, trying to keep a 2.5, 3 to 1, reward to risk ratio. But anyways, the strat is what we use. It's very simple. And again, stay with us through the video. You should have a good idea of how it goes. So, we've got the big threes are the bullish engulfers or bearish engulfers. So we did get that to start out the day, but on the 15-minute. But again, we got the lower high. We entered puts with the break of the lower high with the 1-2 up combo 2 down. So we have very clear entry at the low of the 2 up and an exit at the low of the 2 down. But by then you should have some momentum, and you're also, when looking at our 4-hour markers, if we look at those rules, we take into account opening print, previous high of day, overnight low, previous low of day, overnight high. So our first target with the lower high underneath opening print is going to be, either previous high of day or overnight low, whichever one comes first. Since the lower high was at the previous high of day, our first target is the overnight low, which, kind of coincides with the 1-2 up, 2 down magnitude, knowing that you're going to get momentum to the downside as you push down. And we were able to write it down to the quarter flip. We thought we would actually get a little bit more support here at the 4-hour trigger to the downside. So as it triggered to the 4-hour and the 1-day trigger to the upside, we didn't get the price action acceptance above opening print. So, we're looking at the downside targets. So it did go 3 or bearish engulfing on the 4-hour candle pretty quick in the day. So from there, we just had set went back down to the 5-minute time frame really to get a more precise exit, and just waited for the higher low, higher high combo to get out. We got out somewhere in here. So with this drop, there was a broadening formation that was created on the 15-minute. You could see with the higher high and the lower low. So this is our low. We went lower low, and this is our high. We went higher high. It did create a broadening formation, and you can see that's where we ended at the end of the day. Lines up with the overnight low, excuse me, but you can see how the broadening formations come into play. A 1-hour broadening formation, the bottom at least, was established at the lows of today as well. You see that the very, very lows of today, we got support from that week and the month flip. This is where the week and month would have went red if we went below there. So good support there. Market makers expected move low is down here with where the previous low a day was. So again, we're looking at the bottom of that expected move as well, and you can see that price action kind of reacted how you would kind of expect it to within the market makers expected move. So we did get some good price action to the downside, and then when we entered, we looked at actually no, the 1 hour, we thought we were going to get a higher low on the 1 hour. But we ended up getting a lower high and lower low. So it did look as if the downtrend would continue, but that did get the strong support off the week and month flip. So we did dip our toe because we're at the bottom of the range, the 10-week range that we've been in, this 24 to 28 range. We've been buying calls at the bottom of the range and riding them to the top, and buying puts at the top of the range and riding them to the bottom. You see we've got this kind of double bottom pattern, kind of like we did back over here. It took a little bit longer to establish a couple of weeks ago, that bottom there, but we've got like a double bottoming pattern. So we dipped our toes into some calls for the 19th. If we get the push up, a higher low on the 1 hour, which we would hope to get, because if we look at the 4 hour, the way we ended the day, actually probably should have showed this earlier, but if we look at the 4 hour, we finished in a 3 failed 2 down pattern. So we're looking for the 3 2 down 2 up tomorrow, entry being at the high of the second 4 hour candle of yesterday, and the exit being previous high of day or today's high of day. And that gives us a little bit of magnitude, but what it does is gives us momentum to get back to this gap, hopefully get that gap closed, and then we're looking at getting back into last week's price action, hopefully. Now, I think this would be a level of resistance, and in the short-term perspective, right? It's been short-term resistance before as well, but I'm looking for that we will get the clearance of this level, get up, close this gap, get back to the top of the range that we were at before, and then you're looking for another reversal pattern, because we will be encountering this weekly downtrend line that we've established last week. So again, same type of thing as that we've had for 10 weeks now. I wish I could really say more, but it's the same thing. Intraday at the edges, we're just scalping, playing whatever the short term play is, but in the long term, keeping in mind where we're at, and positioning ourselves to go back to the top of the range. Now, we did get this 3 failed 2 down, looking for the 2 up. If tomorrow we get the 2 up and then we don't reach magnitude and establish like a lower high here on the 4 hour, we'll reassess those calls that we got today for the 19th. And it's no problem to stop out of them if we need to. We could even give ourselves a little bit of a loss, knowing the reward that we have on the board, entering at the lows as we've been doing over the past weeks. I think it's safe to take a little bit of a loss on those for a little bit of a pullback. See if we might just get sideways action for a couple of days. But if we do get a greater signal to the downside, a lower high on the day chart, something like that, then we'll be more prone to jump out of those calls. And intraday scalps, and if this support level does break down, we're back below this monthly downtrend line that we've got here, this green dash line. We've got gaps to the downside right here at the 22.57, as well as down here at the $15 level. So it's looking at seasonality, September, October are the worst performing months for technology. So just try and keep that in mind. We'll just continue to zoom out a little bit, just look at things from the day perspective. Let's get a more clear chart on here. Yeah, I guess this will be fine. We can see we're still sitting here on the quarter, month, and week flip, trying to get that bounce back up, fill this gap here, get to back to the top of the range at 28, possibly press those extended range that we've got into over the past couple weeks, maybe get up to that 29, maybe even 30 level. Maybe even poke through this weekly downtrend line and press this weekly broadening formation. We can hope, but again, we got to keep in mind seasonality, and kind of meet our expectations a little bit. I don't know that we're gonna expand this range any further and press up at this particular time. That might have to wait till fourth quarter. But at the same time, I don't know that we're just gonna go fill the gaps to the downside either, right? We got to just continue to play it how it comes. So from the day perspective, we did get a 2 up, but it was it finished red still. It did at least hammer up, so it's not just a big solid red bar. So it's not the worst failed 2 up in the world. We don't have a upper wick showing, trying to get price acceptance above and it getting rejected. So in this sense, we've got the hammer, even though it's red. It's not the most bullish thing in the world. It's not the most bearish thing in the world. Speaking of not bullish, not bearish, let's take a look at the internals for today. If I can just kind of zoom back in a little bit, they were just flat, right? A little slightly positive at the beginning of the day, slightly negative in the afternoon, then back slightly positive at the end of the day for money coming in versus money going out. Market breadth, up a little bit, down a little bit, came back almost to zero. Market breadth, basically at the zero line, pushed down. It was leaning bearish, the most of the day, but it didn't really amount to much bearish price action than this, much more than that. So, internals weren't too much of help today, but they kind of are help. I don't want to say a help, but they they continue the story of just muted price action from a longer term perspective, right? Yes, it was a 2 up, but it was a failed 2 up, but it wasn't that failed because it hammered up. But even though it hammered up, it was still red. So just kind of a sideways action like we've had for 10 weeks, right? On the week, again, last week we did establish a lower high, starting out a downtrend on the week, but not really establishing one. We would establish one if we get a lower low on this week, right? That really establish the start of a downtrend. But for right now, it's just a lower high. It can just be consolidation, around this. Could just start to consolidate around this 25, 26 area, in between this 24 to 28 level, and continue to move sideways. Maybe we just move sideways all of September and October. Again, just because it's the worst performing months for tech doesn't necessarily mean that they have to be blood red months, right? So Right now, I'm just looking for more sideways action, just trying to continue to play this range until something proven otherwise, right? On the month perspective, not the worst outlook, but we're still an inside month. No decision has really been made. Now we did have a bullish engulfing or a 3 last month, so you would have to get a pretty good amount of movement, either to the upside or downside to get outside of this 3. But again, because of the 3, there's no immediate reversal strat that can be set up. We got to wait for maybe a 2 down to fail, so we could get maybe a 3 2 down 2 up, or vice versa, a 2 up to fail to get a 3 2 up 2 down. But again, that would be 2 months out that the reversal would actually kick in. So not much to tell from the month perspective. If we look at the quarter, again, we came back inside of last quarter's action. So we're no longer in force with the 2 down 2 up. Yes, it did trigger, but you can see where current price action is within last quarter's price action, so it's no longer in force. We were targeting the high of the candle to the left of this 2 down, which is that 36.15. Again, that would, if we did get back above this year flip, that would put us back into full time frame continuity to the upside, meaning the week, month, quarter, and year would all be green, giving momentum to the bulls. But again, we've pulled back in last quarter's movement, and the year we don't have to go over it too much more. We triggered the 1 2 up 2 down. We didn't quite make magnitude, so could it push back down to try and make the magnitude of the move, which is the low of the candle to the left of the 1 being the 621. We made the 723 in April, but 621 is the magnitude for the 1 2 up 2 down strat. So you can see we're back red on the year, almost back in force as far as it's concerned. The 2350, if we get below 2350, that puts the 1 2 up 2 down back in force. And then we're looking at closing this gap probably for sure, but possibly even this double gap down here, if not bouncing off the top of it. So we've looked at things from a wide perspective. I think we looked at the internals. Let's go ahead and set our triggers and targets for tomorrow. So let's go to our swing, and we can see here on the 4 hour, we've got, let's tighten things up a little bit here. We've got the top of our range here, which is basically the year flip, this 2813. It's been our rejection multiple times, poked above a couple of times, but pushed back down, right? And then we've got our support here around the 24 level, which is the quarter flip. At the very lowest, really the year low of last year is the bottom of that range. So we're sitting towards the bottom of it right now. Could we push down a little bit further to the 2350 area? Possibly, but for right now, it looks like we're going to get the 3 2 up 2 down. If we were to get the 2 down tomorrow in that first 4 hour session, part of the session, that would give us a 2 down 2 down continuation. So no reversal, but so there's no clear entry and exit, but there is a clear entry on a continuation, and that's the low of today, essentially the low of the second 4 hour candle of today. So 2412 would be the trigger to the downside. So if we go back and look at our notes that we've got for today, we can see on the 4 hour the 2 down triggers at 2412. Our first target would be 2380 and then 2350. The 2380 is the low of the week so far, yesterday's low. And then the 2350 is the low of last year, which has been pretty good support over time. So we have those as our first targets. Again, you don't need a lot of underlying price movement to have a high percentage move in the underlying stock for SOXL with this low price that we're at right now. So as you can see, today we had like 0.34 or 34 cents of movement, which was 1.35% of movement. So that's still a decent percentage movement. If we do get a further flush to the downside, we'll look at those from the day perspective. Just looking back from the 4 hour perspective for the upside triggers and targets, again, we would have a 3 2 down 2 up, triggering at the high of the second 4 hour candle of today, which is 2491, and the magnitude would be the high of the 3, which is 2541. So you can see to the upside we would have our 3 2 down 2 up, triggering at 2491. magnitude of 2541 with an extended target of 2567. That's the gap close here, and that's the last week's low. Right. So from a 4-hour perspective, those are your triggers and targets. If you want to talk about the intraday triggers and targets, let's go ahead and let's go to the 5-minute chart. Let's just go ahead and bring it up. Oops. Bring it off to the right. Okay, so we've got our previous high a day up here at 2541, previous low a day of 2412. That's also the 4-hour trigger to the downside. 4-hour trigger to the upside is the 2491. So far overnight, the overnight high is 25 flat and the overnight low is 2480. That's bound to change by the open of tomorrow, so those should be different. And then wherever we open, that establishes our opening print. So say we open here tomorrow, if we get a lower high underneath the opening print, our first target is going to be the overnight low. Of course, isn't enough to make us any type of money, no matter how many contracts you get. I guess it'll make you if you get 1,000 contracts or whatever, but it's not what we're shooting for, right? So the next target would be the previous low a day on an intraday perspective. If we get lower highs underneath opening print, which would be like, we're just using this as an opening print example right here. You would want to keep in mind the quarter flip, this 2438. It does coincide somewhat with this weekly uptrend level, which you can see we bounced off of a couple of times. This uptrend was established back in late July, early August. So it is a pretty decent uptrend line that, we don't usually like to use the uptrend lines and downtrend lines too much unless they coincide with levels. And at this point, intraday, it would coincide with the quarter flip. So we do want to keep that in mind as a possible support point. You can see just in today's price action, it was a support point as well. But if we do break through there, we are targeting previous low a day as the next target for intraday trading. From there, we do have the week flip, which basically coincides with the previous low a day. If the week and month flip red, that quarter would obviously have already flipped red, and that would put us in full time frame continuity to the downside. So our next extended target would be the market makers expected low, this 2383, which does kind of coincide with this hourly broadening formation. And unless if we were to open at 2480, a move to 2380 is a full dollar, that would be a pretty big movement for the day. And we could see price ending there. You can always have extended targets past there, but just from an intraday perspective, that's how you'd want to look at it to the downside. If we do get an opening print here, get some price action, then get a higher low here and get price movement back to the upside. Again, your first price target is going to be $25. Second price target is going to be $25.41, which is today's high. Then of course you're targeting the gap close, and then you've got last quarter's high at $25.84 and last month's 50% at $26.11. So you've got those levels. We can also take out, just for the intraday stuff, let's look at let's go to the 4-hour. If we want to pull out a Fibonacci, which one did we do yesterday? We'll just take this one, right? So if you get past last month's 50%, you do have the 50% move of this high to this low at 24.46. 27.08 is the 61.8, and then you've got last week's 50% as 27.39, which coincides with the gap. And we know, we've gone over it before if you're familiar with this channel. Just because you reach a gap doesn't mean it's going to fill. A lot of times gaps will reject or bounce off of the tops or bottom of those gaps. So you want to look for price rejection there if we do get a big day to the upside tomorrow. So intraday and 4-hour perspective, I think we've got you covered. You got your triggers and targets that we have in the notes here for the 4-hour. Don't really need to put them in the notes for the intraday trading. You just use your price levels, opening print, previous low a day, previous high a day, overnight high and overnight low as your guides, right? So let's go ahead and get back into from a day perspective. On the day chart, again, we did have the 2 up. It was somewhat of a failed 2 up. So if we get price action to the downside tomorrow, if price goes below today's low, that's 24.12, which is also the trigger on the 4-hour, right? So 24.12, that would trigger a 2 down. 2 up, 2 down. with a magnitude of, oops, right, the low of this candle. So you'd have the 2 up, 2 down, triggering at the low of this candle, targeting the low of this candle, which is the 2380. And then we have our extended targets. Oops, if I can get my notes right. Extended targets of 2350, 2295, 2257. Don't want to get too carried away with the extended targets because they will roll into our targets for the week. Because for the week, you can see we've already triggered the 2 up, 2 down. But just sticking to the day real quick, just to make sure we've got these all locked in. We would have the 2 up, 2 down, triggering at the low of today, targeting the low of yesterday, which is Monday or Tuesday, right? If we do reach that low, then we're targeting last year's low, which is 2350, and then we're targeting the 2257, which is the top of the gap, which also coincides with last month's low. So we've got those targets. The downside to the upside, we would have a 2 down combo 2 up, right? So the 2 up and then another 2 up would be a combo 2 up, right? And we would have the trigger at 2541, which is today's high, targeting, well, it would have a magnitude of 2735, right? With the 2 down, 2 up, you would target the high of the candle to the left of the 2 down. So since this combo 2 up would just be a 2 up essentially, the magnitude would be this 2735. So we do have the 2735 here as our magnitude, but because that's such a big move from 2541, we want to have a couple of targets on the way up, just price levels that we need to keep an eye out for, either sideways action or even rejections, right? So first up, we've got the 2567, which is the high of the gap close here. Then we've got our 2584, 2611, right? Then we have the 2646, which we pulled out those fibs for, 2646, 2708, and then of course the high there. So let's go back to our chart here. Oops. So if we go back to the notes, we've got our trigger at 2541, targeting 2567, 2584, 2611, 2646, 2708, and then with an ultimate magnitude of 2735. Would we get there tomorrow? I don't know. We'd have to see what kind of momentum we have. We do have ABGO earnings after hours tomorrow, so maybe we get some type of pump for chips tomorrow during the day. Right now, I don't know that would really happen. We're down only 6 cents, but that does equate to about 0.25%. So chips are down about 0.25% in after hours today so far. So there you have our triggers and targets for your intraday trades, your 4-hour trades, your day chart trades. Looking at the week, again, we triggered the 2 up, 2 down with the lower high. All right. We had the 2 up last week. It was a failed 2 up, and we've gone 2 down. It has not reached magnitude, right? The magnitude would be the low of this 2 to the left of the 2 up. So the low of here is 2366. So again, we've got this in bold and underlined because it's in force, right? We're below the trigger of 2567. The magnitude is 2366, and if we do reach it, we've got our extended targets of 2257, 2198, and 2818, right? If we do push back to the upside and make a green 3 or a bullish engulfing candle on the week, that would trigger at 2911. We would have our first target at 2966, then 3055, which should be grained into everybody's head that watches this channel. That is the 61.8 fib of the 2020 low to 2021, our all-time high. And then if we get past there, we do have our extended targets there as well, right? So looking to try and make a higher low on this week time frame. That way we could look at it more as consolidation than an actual downtrend. Again, we got the lower high here, but if we can get the higher low here, then we've just got consolidation and it's just sideways action, looking like more of a flag, right? If we look at, bring this chart down a little bit. Let's get rid of some of these levels. Right? Kind of got the flag here, the flagpole here, and then the flag, right? Even if we're just look at this movement, we got the flagpole here and then the flag. So, technically we should be looking at more movement to the upside, but until we get confirmation of that on a higher time frame perspective. Well, really more the week perspective, because things have triggered from the quarter perspective. So I guess the quarter and the month, we would need that trigger to the upside, which means we'd have to get outside of this range that we've been in for 10 weeks. So, again, from the month perspective, there's no reversals in sight for this month to trigger. We just want to see if we're going to go above last month's high or below last month's low. We've got gaps to both sides, so either way it could swing it. But we're so close to the month and quarter flip that if we do go down, then we're in full time frame continuity to the downside, which is a lot of momentum for the bears, right? And then if we get to this 28.13, it's going to take a lot to crack through it and stay above it, because it's already rejected us multiple times over the past 10 weeks. So we already looked at things from the quarter and year perspectives. We'll just look at the triggers and targets. Again, September triggers to the downside at 22.57. We've got extended targets here. Triggers to the upside at 29.66, and we've got extended targets here. The quarter, it has already triggered the 2 down, 2 up, but it's no longer in force, right? We're back below this 25.84. So if we get back above 25.84, we'll be back in force with the 2 down, 2 up, targeting the 36.15 with extended targets here. And then on the year, we did trigger the 1, 2 up, 2 down, but we're no longer in force. But if we do get back below that 23.50, which again is last year's low, then we technically should be targeting 621. I don't know if we would get that much momentum to get down there, but technically that should be the magnitude for the move, and we did not reach it in April, so it's still left out there on the board. So here's your triggers and targets. Again, if you're not familiar with the market makers expected move that we've got up here, make sure you check out our weekend video where we go into more detail about the market makers expected move and how we charted on the charts. We've got our gaps above listed out. We've got our gaps below listed out. So this is a very quick reference for us that we can take just looking at current price and sentiment for the day, I guess you can call it, however price action is moving in the day, and we can make very clear choices on what we want to enter either to the upside or downside. So we're not sitting out here predicting and reacting, because reacting would infer that we're not thinking. What we're doing is responding. Responding as opposed to reacting. Responding infers that you've thought about it, and we put plenty of thought into it tonight. We put the work in, so we know it doesn't matter for us which way price action goes from an intraday perspective, and even from a swing perspective. We know what we want to get into. So there's the triggers and targets. I've tried to keep it up here as long as possible, so take any screenshots if you need to, or just rewind. I just want to take a look back at the chart and remind everybody that we are in this range that we've been in for 10 weeks, right? And we're at the bottom of it. So we are looking for that upward movement. If we get the 3, 2 down, 2 up, we're looking for that movement to get back up to the top of the range, and then we can reassess at that time. If we get a reversal pattern, we'll get back in puts and sell calls at this point and go back to the bottom of the range. But that's where we are. I hope everybody's enjoyed this video. If you did, enjoy this video, please give it a thumbs up. It helps the channel spread. We're just trying to get the word out there about SOXL. Make it even more liquid than it is. It's not a new ETF by any means, and it's not like it's not a liquid product. But the more people that trade it, the more liquid it becomes, and it does offer great benefits in terms of price entry when you take into account the high delta to low theta ratio that you're getting, and the underlying beta of the ETF itself, depending on where you do your research, is either a 4 or 5. So you're going to get that underlying price movement. So it gives you a very low cost entry with a very high chance of making a good profit. So if you use a proven and repeatable strategy, not necessarily saying it needs to be the strategy I've used, the layers I put on top of the strat and incorporating the 4-hour markers, but if you can use a strategy that is repeatable, you can use this ETF to your advantage, and the options for this ETF to your advantage to make big money, not only big money, but consistent money. So again, this strat you can use with not only SOXL, you can use it with any stock ticker out there. But this channel is dedicated to SOXL, so giving the thumbs up to this video will help spread the word about it and the strat and our strategy. So we're not selling anything on this channel. Everything we offer is free. We want to keep it that way. We just want to, try and create a little area for those that find this trading in our style or a similar style enjoyable, and keep spreading the word about SOXL. So hope everybody gets some good sleep tonight, wake up refreshed tomorrow, and I hope that everybody has a good day trading tomorrow.